Okay, all right. So now we're going on to topic 3, which is about term life. So we've just focused a lot about on permanent life insurance, right? So we looked at whole life, we looked at universal life, but what about term life, right? That's often neglected or many people don't know about. But term life, right, is also very important. So we want to think about, right, why people purchase term life insurance, right, other than permanent life insurance. Okay. So let's start off by looking at some reasons why. Well, with term life, it provides the greatest amount of coverage in a limited period of time, right? So it provides a great amount of coverage. Something else that term life provides is it's often inexpensive, right, as well. So these are more of the pros, right? Now, something, right, that might deter people from purchasing term life or thinking that not be very important is that it does have a termination date, okay? And so it only pays a death benefit if the insured dies within the policy term, right? Because it has a termination date. It's not so permanent like what we talked about with whole life or universal life. And then something else is that with these term life policies, there's no cash value. Okay. So there's no cash value. So as a result of that, we can see that there's no living benefit, right? So we can't borrow against the cash value with term life insurance because there's no cash value. Okay, so it's not like what we talked about in the previous topics, right, with the permanent life insurance. Okay, so now let's look at some two other properties. One property that we're going to be aware of is renewability. So this allows the policyholder to renew the policy for another term without undergoing a medical exam. So we can see here that, right, with renewability, renewable up to a certain age, but premiums could increase as certain ages, right? So as age increases, there's increased risk, right, for the insurance company. So we can see which how premiums can increase, right? Okay, now when we look at convertible, right, this is another characteristic. So this is where policyholders can convert term life to permanent life insurance without a medical exam or proof of insurability. Okay, but usually the conversion must be done within a certain age, right? And the premiums will be higher in the latter policy, which makes sense, right? If you are going to convert to a permanent life insurance, right? Coverage is more comprehensive, which would eventually lead to a higher premium in that latter policy. Okay, so now let's take a look at the specific types of term life insurance. So first, we can take a look at the level term life. So just think about level permanent life insurance because it's going to be very, very similar. Okay. So level term life is where the death benefit and premiums remain constant throughout the term of the policy. Okay, so they remain constant. Okay. Decreasing term life is where the death benefit decreases over the term of the policy. So this is often less expensive, right? But why? Why might someone want to purchase this? Well, for example, right, they might have a declining financial obligation, such as mortgage payments, right? So if they need to pay less mortgage, right? So then even if, right, they pass away, right, when mortgage is almost paid, right, they have a less financial burden, right, to their dependents, right, or to the beneficiaries. So in that case, right, there would be less death benefit that would actually be needed in that case, right? Okay. Now we can also take a look at the return of premium, right? So this is also a type of life insurance where, interestingly, okay, the premiums paid are returned to the policyholder to outlive the policy. Okay, so this is also, in my opinion, a really interesting, right, situation where we can see that the premiums are paid that are returned, right? So in this case, then that's really beneficial, right? Because if the insured didn't pass away, those premiums can still be refunded. And then lastly, we have our annually renewable type of term life. And this is where policy is renewed each year, which premiums that increase based on the insured's age. And this really ties really closely to this renewability property, right, of term life insurance. Okay, so this is a really nice overview for everyone who wants to kind of go through this, right? Study the pros and cons. It's really useful for looking at, right, who should purchase it as well. Okay, so we can see that this is really, really, really useful. And I recommend that we kind of go through this on your own time so that you have a better understanding of the similarities and differences between them. All right. So now let's take a look at these two clicker questions. Just to do some questions, just to do some practice. Let's take a look at these and then we will go over them shortly. Okay, so for number one, we're looking at the difference, right, between limited pay and single premium life insurance policies. Now, the main difference is that limited pay requires ongoing payments, right, still for a limited amount of time, right, but still requires those ongoing payments, while single premium requires a lump sum payment, right? Number two, right, we can see that would be B, right? So it combines features of both variable and universal life, right? And talked about this in the lecture, right? We looked at how it combines the features of variable, but also with universal life.